I'm Shay Russell from mining.com.au, and it is that time of the week again where Mr. Data Dan sits down in the chair, puts his headphones on, and we talk about all things data. Sometimes we take a bash at politicians as well. Data Dan, welcome.
Thanks, Shay.
It is good to see you are safe from the cyclone that is bearing down on Brisbane and Gold Coast right now. Has it reached you yet?
No, just a lot of requests from the Home Office to get things locked down. So that's what I'm doing, and just kind of have done that. And now we're just looking at the news flow, and it's again elevated, but pretty good.
All right, let's dig into today's news because who knows how long you'll have internet reception for. Kicking off today, trade data is out. Now, there's some exciting. This is probably why I don't have many friends. There's some exciting bits in the trade data that we actually get to go through to see what's happened in the Australian economy back from January. Listen, mate. Kick us off. Where do we start with the trade data? What were you looking for in this set?
Well, obviously the headline numbers are very positive in terms of the actual balance. It's just over 600 million surplus, but that number has gone down. It used to be 5 billion, 6 billion, 7, 8, 9. Again, on elevated iron ore was the key thing there. Now, iron ore is coming at $9.5 billion export per month. So that's actually a lot lower than it has been since, let's say, the end of December 2022. And then, of course, coal's also coming off a little bit, and that's really some demand moderating. And we have to talk, that's met coal. So there's really a forward indicator there on, what industrial production is doing, particularly in Asia for Australia. For people who are getting a little bit obsessed, I'd say, about the tariff wars, and we can talk about that in a tick, but it's really the case at the moment is that Australia and the trade report in particular is a snapshot of what private industry is doing in terms of selling to the world. And so the most interesting takeaway at the moment is gold, non-monetary gold, Shay. We do have a breakout number there, and it's quite extraordinary, actually.
It certainly is. Just for a little bit of context here for everybody listening, for this time 4 weeks ago, you pulled out the non-monetary gold exports to the US in particular, and it was like $1.2 billion for December, a quadrupling on the month before. Mate, what does that number look like now?
Well, so the headline number is this: it's $5.3 billion total gold export. Now, the US number last month was basically accounted for more than a half of that $2.9 billion number. So, where's the gold going to? Well, central bank buying of gold is elevated. Now, again, geopolitical uncertainty, strong men of the world, they can say what they want, but the greatest profiteers at the moment are those producing gold, and that is with an emphasis on those producing gold. They're tied into what, 3,000 US bucks an ounce. So that's really the sleeper here within the trade report. Normally it's an iron ore, natural gas, copper, aluminum, those headline commodities, agriculture around beef especially. They normally tend to take all the shine, but there is this category here in gold, which is non-monetary gold, I should say, and that is an extraordinary number, $5.3 billion, or 5.272 billion to be exact. So that's an extraordinary number to come out of the ABS earlier today.
It certainly is, and it's something we'll probably, hopefully, you'll delve into next week in your column. I am hearing words from those in the gold industry that demand at COMEX is starting to ease for the physical. But Dan, I do love all things data, so you can bet your bottom dollar I'll be requesting this information for February to see if it backs up the case. Now, you mentioned strongman tariffs. Listen, mate, I'm aging in dog years at the moment on Twitter and just watching the politics coming out of the US. One day we're having tariffs, another day we're not, then they're doubling, and then they're not. What do we make of this tariff? That's not even tit for tat tariffs anymore. It's just
No,
throwing a tariff out to see what the reaction will be. Like, are we chasing red herrings here by following this news?
we are basically looking at a country that, they're talking tough, but the general thing is it's so layered what's happening when you just do holus bolus tariffs, like car production, for example, in the United States. They rely on parts to be manufactured in Mexico to go into the United States, then to go to Canada, for example, for refinement, then they go back to the United States. So they're now going to have an increase in their own production of car vehicles because they've upset their own apple cart. So it's a bizarre tactic, and it will, like the tea leaves would suggest already that far more problematic. And again, it seems to be about zero sum making deals. But like given the most recent performance of the US president, uh, if he wants to look at it just using the car making example, the most famed auto executive of all, Lee Iacocca, who rescued Chrysler in the late 70s, his leadership mantra was to succeed in anything, you have to take people with you. And so he got the unions of the day over the line by when they said to him, "How much are you going to take for a pay cut?" And he says, "I'll pay myself $1 a year until we're profitable." And that was in 3 years. And they took a pay cut, and again, that money was paid back, and Iacocca became a legend. But the fundamental thing underlying that was, you know, he took people with him. In this case here, it's very hard to see. I mean, the president of the United States will obviously get some early wins around, leaning on people, even the Ukraine, but it's very hard to see how this does not play negatively for America in the longer run.
It almost ignores just how embedded the global supply chains are. And I just referenced, and I don't know if you are able to whip that data out at a moment's notice. We're about to find out. You mentioned burger data, meat exports. And I know, and I'm bringing up the burgers because the US imports a bucket load of our meat. Like, and they eat a lot of burgers and they don't eat, not all of it's nutritious. They've got a cattle shortage, they've got a labor shortage, they've got a beef shortage, and now Trump wants to go whack tariffs on meat imports into the country when the agricultural systems in place can't actually meet demand. The reason why I'm waffling is, what are we exporting to that country right now?
So normally, beef exports are around a 600 to $700 million a month run rate of um, meat, and that has been going in more recent years to China, India, some parts to Europe, particularly the UK. The US now is accounting for about 20% of burger
Mm.
meat, and that's meat which you can just snap chill. And here's the other thing too: they're they're getting it for the exchange traded, the exchange rates, the other gypsy in this whole pack. So when you introduce tariffs, you actually make your currency a lot more expensive in the US case because it's the reserve currency, and this kind of US exceptionalism has obviously fed that narrative for the currency, but you make your competitors a heck of a lot cheaper. And so
Yes.
that's why it's kind of just bizarre watching some of this. So the US, it's now like 120, $150 million per month as a run rate, and that's going high with a bullet. And it's really because they love eating burgers, truckloads of burgers, and so that's really what a fascinating dynamic. But again, like the US Australia relationship trade wise, the US runs a trade surplus with Australia. We don't actually run a trade surplus with America, and we actually don't export. Like it's the fifth largest export destination for Australia, and that's primarily over those two things at the moment: gold and beef, and some pharmaceuticals, which is kind of just generics, which is really just runoff, for want of a better way of going to market. So that's the hot tip with it. It's just a bizarre thing to do, tariffs. I mean, it's really just a tax on innovation. You'd rather go for the more expensive incumbent product locally than go for the one which has been refined, innovated, and evolved through market forces, which is ultimately a lot better. Uh, but because it's from overseas, uh, it doesn't cut muster. It's a bizarre, like the global ties of trade, for example, are more interconnected than ever before. I mean, tariffs are such a 1970s throwback and didn't even work. And so, yeah.
Won over a middle America for the vote, only to alienate them in the implementation process.
Well, they've got some, like, I mean, I think that Donald Trump talks about making America great again. I think making America humble again might be a better way of going. But anyway.
Now, speaking of politicians, I think this will end up with us speaking about politicians. Elbow, Prime Minister Elbow, we're due to have an election called. There were whispers on the ground that it was going to happen last weekend. It didn't. Obviously, now with Cyclone Alfred knocking on your doorstep, it's very unlikely to be called this weekend again. Um, the reason why I'm mentioning the election is business confidence is due out next week. And I know I'm going to push you for info on those numbers then, but we can't talk about business confidence and the upcoming election when it's called. Like those two are very much intertwined. What are you going to be looking for when those numbers come out?
Well, the business confidence numbers, really, the one's the NAB report, which is kind of what we really tend to focus on. There's a bunch of others in terms of consumer confidence and what's happening at the household level, but the business confidence ones, it will be like their measurement that is like normally an index based. So like normally it becomes like a positive marks, a positive 12, for example, which means things are elevated. So they index to zero, if that makes any sense. So confidence tends to be a few integers plus or minus around that zero mark, not like a base case of base 100 where it's 110 and what does that mean? So uh, in the Australian case, like we saw the national accounts numbers had come out yesterday. Pretty good story to tell the fact that the per capita GDP recession has been broken, but it was only like 0.1%. So what we're really looking at is that capacity utilization numbers within that report. So what that means is the number of the actual activity in the economy. So if the number's over 75, 80%, then the economy is doing quite well. If it's below that, then you probably have to another look at it again. But things such as forward orders, um, also, that intent around, activity is kind of the big leading indicator within that. So that's basically what we're looking for. Again, though, for Mr. Albanese and this cyclone is probably not a bad way. You probably almost want to run a small, tight election in an environment which is really there's not much going on in Australia, and kind of we are held hostage to what's going on through property moguls come presidents in North America.
Listen, everybody listening, you know when you've got a real, genuine data guy on your hands when they use words like integers in a simple data example because they don't come out of the common man's mouth very often. It's how I know I'm talking to a proper statistics nerd. Listen, Dan, I've made jokes about that cyclone coming, but I probably should let you wrap up and go prepare for the extreme weather event coming your way soon. Thank you so much for the chat today. However, cyclone or not, I still expect to have you in front of me this time next week.
Yes, I look forward to it, Shay.